What's up, people? How you guys doing? And welcome to another week and another edition of Market Watch. I'm your boy, Erik T. Jackson. That's my other boy,
Eddie
Eddie,
Chinea,
Eddie
glad
Chinea.
to meet you, baby. Appreciate you having me on again, man. This is good. I like that we do this every week, man. Give the people something good.
Yes, sir. And we are ready to give you guys what you want. So we've got a sponsor this week. Eddie, who we got?
Yeah, so good friend of mine, man. She's in the real estate business, very successful. She's very good at what she does. Actually,
Mhm.
she's coming out of the finance world, out of the banking world. Her name's Christina Moore. She's a realtor with Keller Williams, Clear Lake, man. So appreciate her sponsoring the show, man. Hope that if you guys are ever looking for a realtor, looking for somebody that's going to do business the right way, give her a shout.
Absolutely. And just because she's in Clear Lake doesn't mean you need to be in Clear Lake. I'm sure
No,
she does the definitely the
right at
Houston
Houston area,
area.
man. She's
Yes,
she's
sir.
a go getter, and she's a good negotiator when it comes to. So she's going to do right by her clients. Anyway, good friend of mine. Like I said, Keller Williams, Clear Lake, Christina
All
Moore.
right.
She Pearland resident also. So if anybody
Hmm.
in Pearland is listening to this and you're looking for a realtor,
And
so
I'll uh,
appreciate her
I'll I'll
sponsoring.
have her information in the description below.
Yes, sir.
All right. Buddy. Uh so Chairman Powell was talking today.
Yeah,
Uh
man. So
what
you
do you have
know,
to say, man?
you know, again, everything that what he says or a certain way how he says things
Hmm.
can have a crazy effect on the market, man. Markets end up rallying. I think still trying to keep that. One of his quotes was, and this isn't verbatim, but we still have a ways to go. We're not there yet. But the mere fact that he's talking about tapering down and cutting down the rate hikes
Hmm.
sent the market, to rally back. So I think pre-market there was some worry and uncertainty, some a little bit of a sell-off, and then once I'm talking almost as soon as he got on, within minutes, because I was
Hmm.
watching on CNBC, man, within minutes you could see the Nasdaq start climbing back, the Dow starts climbing back. Yeah, man.
Yeah,
So,
yeah, it was a green
but
day for sure.
yeah. But the major point of it was that he was just saying that again there's a long way to go. They've gotten back some numbers that looks like, yes, things are on the right path,
Okay.
so they're going to kind of pull back a little bit on the rate hikes. So we've had what, four straight 75-point basis hikes, you know what I mean? So I think probably going 50. But no, it was good. It was good for the market. It was good to hear that.
Good.
What's killing us now is still the employment. You know what I mean?
Yeah.
Job reports coming out and wage growth and stuff is still, it's killing it. But if you notice, man, everybody, you got a bunch of companies laying people off, man.
Yeah, yeah, man. That's where they trying to save a buck on the payroll.
Man, well, yeah, save a bucket. I'm telling you, man. The crazy thing, I think we talked about it last week, the week before that. It's crazy how that is helping our country overall. Like, we got to put people out of work so that we can fight inflation. You know what I mean? So it seems
Crazy.
so counterintuitive. You know what I mean?
Yeah.
On a broad sense, yes, I can see what they're saying and why those numbers make sense. But man, like, it's so counterintuitive. You're trying to, like, let's put people out of work so we can slow the economy down. You think
Yeah.
a booming economy. So
So so was today was just a speech. Today was not a rate increase or decrease.
no, it's more of a guidance going into the next year. And
Okay.
as they continue to go into the next year, and they're going to have those rate hikes, you got to anticipate, hopefully, that the market will have priced it in by then.
Hmm.
And if not, just expect a dip. I mean, I don't think that we're in the clear by any means.
Yeah.
Just depending on who you listen to, man. But again, he was trying to remain hawkish with some dovish undertones. I don't know how else to explain it, man. But kind of say,
Yeah.
we got a long way to go, but we're
They,
on the right path. You know
he
what I
was
mean? But we ain't out of the woods yet.
he was a walking oxymoron today. No, I'm joking.
Oh man, yeah. Everything that comes out, they were talking about on CNBC, man. And he was saying, like, I don't understand how this makes sense. Like, we got to put people out of work in
Yeah.
order to get this thing, you know what I mean, to get the economy right. So
So it seems to me like every time he says something positive, the market spikes up. Every time he says something negative, it goes down. Do
yeah,
you
it's like,
think it's on purpose? Do you think he
I think that
purposely do
some of
that?
that is what I think some of that is more. I mean, it affects everybody as an investor. You know what I
Hmm.
mean? But I
Hmm.
think where a lot of that control is coming from is, the institutional investors, man. Those are the ones you look at, like a BlackRock or Vanguard, that own tens and 12% of some of these big companies.
But
Well,
what I'm
when they
but
speak
what
like,
I'm
hey man,
saying,
rights going up, people cutting back, or we're gonna sell a bunch of shares, you know what I mean? And they start trimming positions.
but what I'm saying is he'll say something positive, like you can believe it, choose to believe it or choose not to believe it, but he'll say something positive and it goes up, whether it's BlackRock or whoever
Right.
buying.
And just because they figure they look, when he says something positive, that means the economy must be doing something right. People, and look, when it all comes down to it, that means
Uh-huh.
somebody's going to have more money in their pocket to be able to buy the stuff. So let's buy it now. So, you know what I mean? It's going to run price up. So when he says something positive, market's going to be green. You know what I mean? And when he's,
Yeah.
comes out and it's, negative, like, oh, it's a grim outlook, they're still
Okay.
talking about a soft landing. But yeah, when it's not good news and Wall
Uh,
Street takes is not good news, and you're going to see red days.
so for us investors, we sort of would always want him to say something positive, but he probably doesn't have a dog in the fight, huh? He probably doesn't. He probably don't care if the market go up, down, sideways, or whatever.
No, yeah, and that's, I mean, you got to, yeah, when he first came out and they were doing these the hikes and everything, like, yo, come on, like, when's it going to end? You know what I mean? And he's all about low. We're fighting. My job is to make sure we are fighting inflation.
Hmm.
This is how we got to do it. So if the market's got to suffer, hey, it is what it is. But
Oh,
again,
okay.
that's why markets are cyclical and they're
Yep.
going to go up and they're going to go
Yep.
down.
Yep.
Because down is never as bad as you think it is, and when you're up, it's never as good as it seems it is. So
Hence, why you need to be a long-term investor. You know
yeah,
what I'm saying? Not a
long
short
term
term,
game.
not medium term. Yeah, just know that it's going to be cyclical. And like a lot of people I talk to who've been in it a while, if you've been in it 10 years or more, you've been through 5, 10 cycles of
Oh man,
up and
long
down.
investment.
You know what I'm
Yeah,
saying?
man. .com,
Yeah.
yeah, the financial crisis. Yeah, a little bit of everything.
So you as a long term investor, you understand the peaks and valleys and how to withstand those. But as new investors, you know, you may not get that. You know what I'm saying?
Yeah, well,
Uh,
I mean that takes time. You know what I mean? Especially when you're talking about your money, right?
yeah.
So you invest in your money, and it's one of those like, I guess if there's any advice I can give, like don't check your account every single day.
Okay.
Because when you have runs like we've had over the last, 2022, that can make people like, you get scared, like, oh my God, I'm losing money.
Uh-huh.
You know what I mean? So don't check your account all the time. You know what I mean?
I
Like give
hear
it a good
you.
proportion. You can check quarterly, check it semi-annually, but
I hear you. And
do it
that,
for the long-term gain,
uh-huh.
and keep that in mind that when
Yeah.
the prices are coming down, yes, it's
Yeah.
lost a little bit of value,
Hmm.
but you continue to contribute and continue to develop that wealth. You know what I mean?
Right.
That mindset where
Right.
long term, it's up a lot more than it's down.
Yeah. Yeah. And I know when mine was up, it was up a lot, and I would check it every day. I ain't gonna lie, just like seeing it up. But now
Yeah,
that it's sort of down, yeah, I check it twice a week probably. You know what I'm
yeah.
saying? I mean, that's just how it is. Uh, so firing or laying off people is and expecting that to improve the economy. So that's is he saying that there's too much money out there? Like people have too much money to spend?
Well, and that's what it is. I mean, think about it like this: if I open a business and I know that everybody in America, will just say, is making an extra $1,000 a month, well, I know people can afford to pay a higher price for my product now. You know what I mean? So prices go up, right?
Uh-huh.
By inflation. So they figure with less people working, and again, they'll put it in a very, I guess, elementary sense, but less people working, there's less money being spent.
Yeah.
All right. So what does that have to do? Well, now people don't have as much money, so now we got to bring your prices back down, right? And then you battle inflation that way. I
Hmm.
mean, very simple sense. But I think a lot of it has to do with wage growth, right? How many, times people are, jobs, what they're paying now. And it looks like, hey, it's tough for business owners who want to lower their prices when I know that people are making good money. You know what I mean?
Yep.
So from a business perspective, I get it. I mean, I see it on both ends. You know what I mean? I'm
Right.
tired of paying, $4 almost, a gallon of gas,
Yep.
but I understand that why those prices are the way they are. You know what I mean?
Yeah. 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 Okay. So that's just about all he had to say?
Yeah, I mean, like I said, a lot of it was, we're not in the clear by any means.
Okay.
He talked a little bit about making sure that as they slowly, like, have slower taper down the rate increases.
Hmm.
Um, they're saying that could come as soon, something like I believe as early as December.
Yep.
Uh, but again, there's still going to be rate hikes. So I don't want anybody to think that like, oh, we're in the clear. I mean, like there's still a chance that that the markets fall again. I mean, I don't think it's out of the realm possibility for that thing to fall into, like the S&P 500 to fall to the 3,000, 3,300, 3,400 range.
Yeah.
I mean, going into the first quarter, because you got to think with all the stuff going on, yeah, the Fed, and that's great, but earnings are going to be taking a hit now because of inflation. And once that stuff settles in, I think that's going to, we're going to still see a little bit of a jolt in the market to the
Yeah.
downside. Now,
Okay.
I could be wrong. You know what I mean? I don't want to be a pessimist, but just looking at the ripple effects of everything that's going on. I mean, I can a lot of people and say, oh man, market's going to bounce back and put your money in the market.
Mm-hmm.
You know what I mean? But there still is that risk that, we're not in the clear yet by any means.
Already.
But now that we have more information, you know what I mean?
Mm-hmm.
I think that stuff allows for, kind of a faster recovery
Yep.
in the market. So
Okay.
but
Okay.
they've got projections of that stuff being as high as 4,800 next year. You know what I mean? Towards the end of the year, they think that the first quarter of 2023, is where we're going to see another drop. You know what I mean? Another dip in the market before it finally bounces back.
Okay. So keep your stocks. Don't sell. It'll be all right.
Yeah, don't sell at the bottom. You know what I mean?
Don't sell at the
Like if
bottom.
you worry, you know what I mean? If you're worried about it, then sell it now. Take some money off the table. If you've got profit, take some profit off the table and hold on to it. And if it does drop, hey, buy in again. That just money management, have a trading strategy. We talk about all the time, man. Trading strategy.
Absolutely. So before we get into this next point, I just thought, let me ask you this. So there are some financial advisors out there or guys that just know quite a bit about stocks and things like that. So when they talk about price points and what to buy, like a specific price to buy stocks at, like is that from reading the charts, or is that a gut feeling, or because they just seem like they're arbitrary to me.
So I'll say this: it's a little bit of everything. So, you know what I mean?
Uh-huh.
You've been on the sideline, and sometimes you got that script, and you got what you wanted to call, and sometimes you just got to pivot. And it's gut. You know what I mean? Like, I'm killing them with power right now, and I've got everything else I want to run, but they can't stop power, so I'm gonna keep running it. You know what I mean? Some of it is gut feeling, right? Like, we got to pull a trick play out here. So I think that there's a fine line between art and science. There's the technical side, which is the charts. You know what I mean?
Yep.
And there's the fundamental side with reading financial statements and looking at valuations of companies, things of that sort.
Right.
And some of it is gut, you know what I mean? Some of it is knowing management, you know what I mean?
Yeah.
How do you feel about the people that are in charge that are making decisions? You feel as though they're going, like when Jack Welch was leading GE, man, that dude was doing phenomenal things. You know what I mean?
Absolutely.
So there's a lot that goes into it, but I think the ones that are really, really good at it have both the technical side, right? Technical indicators, reading charts, and the fundamental side, and they know how to blend them together and see like, hey, is there any divergence here? Is there anything that's not matching up?
Oh,
right?
okay.
Yeah. And I think some of it is gut too. And like I said, and those guys have access to a lot more research and things like that that's put together.
Yeah, absolutely. Sometimes I see guys that they know what's about to happen, like overnight, like trading has stopped. Maybe they're on all these different financial channels and stuff, but a lot of them, this is gonna happen. This is gonna happen. How you know that's gonna happen? And sometimes it happens. Okay, that's.
And they talk, and I mean, again, remember, there's a lot of things that happen after hours.
Yeah.
Like you have the dark pool, and that's where a lot of institutions are going to be moving. Could be 500,000, a million shares or something. 2 million shares or something. And if they did that during the normal trading, they try to offload it. If they were trying to sell 2 million shares, man, they would have, they would affect price. So they do that stuff.
Yeah.
When the markets are closed. You know what I mean?
Oh, right.
It's not illegal. You know what I mean? It's called dark pool, and it sounds like, oh my God, he's joking. It's all legit. It's not, You know what I mean? And it's kind of a way for them to be able to do some of the things they need to do without sending things in their flurry,
Okay. All right. So our next topic, let's sort of look at some different retirement accounts. Okay. Let's talk about, first of all, can you talk to us about the difference between maybe a traditional IRA and a Roth IRA?
Yeah. So that for all our listeners, our viewers, guys, if you learn nothing else, understand that one is a pre-tax, one is a post-tax. All right. How you make your contributions. All right. So we'll start with the traditional IRA. And really, with both of them, you got to be 59 and a half before you can pull that money out without incurring a penalty.
Okay.
So with a traditional, a lot of times you're going to be contributing usually pre-tax dollars. So the money will be taken out of your paycheck before taxes are taken out, right? So you make that pre-tax contribution. So you're almost, you're getting to save this money and let it grow tax deferred. And then when you go to make your withdrawals based on your income tax, the tax bracket you fall into, that's how you'll be taxed when you start making withdrawals from that account.
Okay.
Right? With a Roth, you're going to contribute the post-tax dollars, right? So everything's been taken out of your check, all your other deductions, health insurance, taxes, everything, and then you're still going to open up a Roth account and say contribute $100. Well, that money has already been taxed by the government and everything. So you put it in the Roth IRA, money grows, you can make your contributions. When it's time to withdraw from that, you do not get taxed on those withdrawals. So the biggest deal is with traditional, when you go to pull the money out, you're going to get taxed on that money, but you get to put it away before your paycheck is taxed.
Yeah.
With a Roth, you don't pay any taxes when it's time to make withdrawals because that money was already taxed before you put it into that account.
Okay.
So,
and so it makes sense to get which one?
Well, it all depends, man. So, for I would say anybody, so you're only allowed so many, a contribution, so much a year for either one of them, right? So if you have a Roth, you're allowed $6,000. I believe if you're 50 or over, you have what's called the catch-up provision, where you can they allow you an extra $1,000. So you're allowed 7,000 if you're 50 or old.
Okay.
So which one makes sense? Well, I mean, depending on how you look at it, right? So if let's just say somebody, you have two doctors, people that make, $200,000, combined, and they do very well for themselves, and they're looking for ways to reduce their tax burden at the end of the year, you can contribute to a traditional, right?
Okay.
So at least you get to write those contributions off, as far as your taxes go.
Yep.
It doesn't hurt to open up a Roth also.
Okay.
And contribute post-tax if you prefer to do it post-tax. I mean, so it really just depends on, you know what, I don't make a ton of money and I don't want to have to pay taxes at the end. So do you think you're going to be in a higher tax bracket when you retire or in a higher tax bracket now, right? So where do you plan on those being? So if you feel as though you're going to be in a higher tax bracket later on down the road, well, then you might want to start a Roth. This way, when you take that money, you're not getting taxed on it. So.
Okay. Okay. So most people, I guess if you grow in your career, you'll be in a higher tax bracket at the end, towards retirement, and that's why it seems like the Roth would be the best way to go for most people. But
Yeah, I mean,
if
I
you want,
advise people to do them both. You know what I mean? Have a pre-tax and have a tax free and a tax deferred. And
so the traditional, the benefit would would so you would get more of a benefit immediately than later on for the traditional, and for the benefit for the Roth will be later on. Is
the
that
benefit of the Roth, yeah, you're going to take advantage of that later on when it's time to make withdrawals. Because
uh-huh.
again, if you tell them, hey, from my Roth, I've got $1 million in there, and I want you guys to mail me $3,000 a month.
Yep.
Out of that, well, they're going to mail you a check for $3,000. With the traditional, you're going to request 3,000, but out of that 3,000, they're going to take out what needs to be withheld in taxes.
Okay. Yeah.
You know what I mean? So yes, down the road, yes, a Roth helps. And there are people that do, Roth conversions where they say, hey, you know what? I want to be able to convert this thing now. I'm retired. I don't have a lot of earned income anymore, right? I'm going to be living off my pension. So what I'm going to do is I'm going to, leading into that, maybe I'm going to convert my traditional to a Roth. You pay the taxes on it, right? And you convert it to a Roth, and then now you can pull from that tax free. You know what I mean?
Yeah.
Backdoor Roth conversions, things of that sort, where you can try to, find a way to, again, keep as much of your money as you can, within the confines of the law, obviously.
So you still have to pay taxes as you convert it to a Roth.
Yes, but if you convert, let's say like right now, I've got an account. I just opened up a traditional. I've had it for 3 years, and I've got $10,000 in there. Well, if I convert that to a Roth now, I'm going to pay, we'll just say 20% in taxes, right? So they're gonna roll over $8,000. Well, now I'm just going to contribute to that Roth, so I don't have a lot of money. I didn't pay a ton of taxes on it now. Whereas if now I have $1 million in there and I want to convert it to a Roth, well, now you're taking
a lot more.
200,000. Yeah, now you're taking 200,000 as opposed. You know what I mean?
Yep.
So you're paying a little less in taxes. So just based on how if you can afford it after everything's all your deductions taken out of your check, yeah, get a Roth. If you need the extra, stuff for the tax, for a tax at the end of the year.
Yep.
Then
Okay. So Let's look at a 401k. So that's for public companies or private, but that's
From a
give
401ks? Is
yeah,
that
yeah,
what you said?
yeah.
Yeah.
Public
So with
companies.
a yeah, usually employer sponsored, right?
Okay,
So
employer sponsor.
401k.
Hmm.
I mean, I guess almost a literal definition would be, something like a retirement savings investing plan, right? That is offered by an employer. All
Okay.
right. So sometimes with these things, it's so think of, yeah, you start up we'll just say a traditional IRA. Well, now you're going to do something similar, only you're going to do it through your employer. Right. And then sometimes those employers offer a matching contribution.
Uh-huh.
And there are a lot of advantages to a 401k. Again, depending on who you talk to, or what the talking heads, whoever's on at the time. Some people are like, oh, don't waste time in a 401k, open a Roth or open up a traditional. I think that if you're going to work for an employer that offers a 401k, take advantage of that fully,
Hmm. Hmm.
especially if they match, because that is, that's free money you're getting.
Free money, baby.
Yeah. Yeah. You know what I mean? Like they're contributing to your retirement for you. You know
Right.
what I mean? I had a conversation with a friend of mine the other day, man, and he's was telling me he's investing in his 401k with his business,
Yeah.
and that they match. He says, I believe it's for up to the first 6%, they match dollar for dollar. So you're making 6% a year no matter what.
Wow. Yep.
You know what I mean? All right.
Hmm.
So, and then with 401ks, they have different contributions
Okay.
limits than your traditional IRAs and Roth IRAs.
Hmm.
But with a 401k, I believe your max contribution is 20,500, and then
Okay.
I believe next year it goes up to 22,500.
Okay.
And then again, if you are 50 or older, right, so you get that catch-up revision.
Yeah.
This year it's 27,000, and I believe next year it's going up to 30,000. So those of you that think, oh my God, it's too late, I'm 40, 45, man, I don't have anything saved for retirement. It's not too late. There's a way to do it,
Yeah.
and there's catch-up revision. So if you're willing to take advantage of those things, there really still is a way.
Okay. Okay. So, the difference between because it's sort of it sort of seemed like 401k is it just another name for an IRA? Is it a sort of an IRA or is it
It's similar. Sometimes they set
what's
them
the
up, 401ks will set them up as, kind of like a 401k, almost as a Roth or traditional. But for the most part, with a 401k, if I leave my employer, if I work for, well, let's just say I work for Walmart and I have a 401k with Walmart. When I leave Walmart, I can leave my 401k there. Sometimes they might make you roll it over for a certain amount of time. But let's say I leave Walmart and now I go work for Target. Well, Target has a 401k program also. Well, I
hmm
can take the one that I have from Walmart, and I can roll
hmm
it over. But the
okay.
same kind of rules are going to apply. If I pull from it before 59 and a half, then I'm going to incur a penalty, and then they're going to tax it also, right? Because that money's coming out of your paycheck pre-tax. So it's similar to a traditional.
That's what I was getting at.
Yeah,
So
yeah, yeah.
yeah, so so whether you get and I assume the taxes just like a traditional, the taxes you have to pay are going to be based on what tax bracket you're in.
Yes, and I believe sometimes they will withhold. They'll just say, "Hey, we're withholding 20%." You know what I mean?
Okay.
So, it's on you to understand what tax bracket you fall into, what, you're going to have, based on income and all that stuff. If you do your own taxes, if you have, an accountant or CPA that does your taxes for you, well, then you give them all the information, but just kind of have an idea before you start, if you pulling from that early, just because
Right.
it's going to go down as earned income, right? And sometimes that bump you up. If you take too much, I'll bump you up to the next tax bracket. And now you're like,
Mhm.
oh man, you know,
So I know the benefit of investing in a 401k if there is a match, whether it's 50% dollar for dollar. What's the benefit of a 401k if they do not match?
just gives you a chance to, you're if work do it through an employer. It's just a lot easier. Go through the HR department. Again, either way, whether they match or they don't match, you're still putting something away for retirement for yourself. You know what I mean?
Okay.
You're still taking care of your future self, so it's not terrible to take advantage of. Now, you have a 401k at work. You also have a traditional IRA,
Hmm.
and I do want to go back to the IRA. With the IRAs, you have, I don't care if you have 5 IRAs, you're only allowed a maximum of $6,000 total to contribute to those, right? So if you have a
Okay.
401k at work and you get that extra amount that you can contribute,
Hmm.
so now, just ways that you can continue to maximize how much you're putting away, for retirement. But just doing it alone, just putting away for retirement alone is, it's just important.
Very, very much. All right. Good deal, man. Good stuff. So let's talk about governments and their retirement plans. I have a 403B.
As do
Okay.
I.
As do
As do
you.
I.
Okay. And so, uh, well, first of all, why a 403B as opposed to a 401k? Why do governments
So
do that?
just like, man, look, because people that are far more intelligent than me and that have power to make these, bring up these codes and all this stuff, that's what they did. I
Okay.
don't even have an answer for you for that. There's a
So,
403B and a 457. You know what I mean? One thing I
okay.
can't say with 403B is just be careful that a lot of times that you don't get stuck into an annuity. I'm not down talking annuities, but just knowing as a investment advisor,
Uh-huh.
getting those annuities rolled over, I mean, it is a pain, man. And if you're not careful with what you're, with knowing what you're getting yourself into with annuity, you
Okay.
can find yourself like, kind of stuck in that thing.
Okay.
So
Oh, I guess maybe I thought the 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 tax rules might have been different with the 401k or 403b, but maybe not.
no,
So,
same deal. You're still, again, you pull it early because a lot of those things are, like I said, are pre-tax. You know what I mean?
okay.
They can pull it out pre-tax, and because it's pre-tax, you're going to
Yep.
pay taxes on it. They're going to get their money regardless. I promise you that. So
Absolutely. So then if 403b is government, what is 457?
So, all right. So 403B. All right. I mean, also, schools, things like that, hospitals offer these 403Bs, right?
Okay.
With a 457, that's going to be more of the government, state, municipalities, things like that.
Courts.
Yes.
Okay.
So, like with a 457, usually state, local government agencies, sometimes nonprofits. Those are the ones going to offer those. All right. With a 403B, you can sometimes you're able to contribute to a traditional or a Roth 457 B account. So there's a bunch of them. And again, if there's ever any questions, feel free to hit us
Mhm.
up with all the questions.
Yep.
There's so many limits and I mean, and numbers to go through. I don't want to confuse people, but
Yep.
just understand the grand idea of all this is to, if they offer something like that, look into it if you have nothing set up because it can't do anything but benefit you.
Absolutely. Absolutely. Uh, that's what I would say. And my dad's big thing growing, because my dad worked for the state for 20 years, 25 years.
Mhm.
He retired in his 50s. He was retired 20 years before he passed. And he just felt like that gave him a lot of security, allowed him to raise his family stre relatively stress free and that type of thing. So he sort of always stressed, working for the government and things of that nature, just because they were sort of seen as safe, you
Yeah.
know. So, uh, as far as the retirements go, I I tend to agree with him. I mean, it to me it seems like uh the government's retirement funds so far have been a lot safer than maybe public companies retirement accounts. What do you have to say about that?
Man, so my mom, similar, she worked for the city of Hollywood in Florida. She just retired, I believe, April, somewhere around there, March,
Okay.
April. And
Hmm.
she retired with a pension.
Yep.
All right. So you just contribute to it. You know what I mean?
Hmm.
Um, look, I can't say anything bad about it. I mean, she'll get a check for the rest of her life. You know what I mean?
Hmm.
So it's always good to participate in those things and to get into them. But looking and seeing also what else you get to retire with when you're working these government jobs, man. But if you can take advantage of, yes, having a 457 and get yourself a traditional, if you find that you've got money, man, and find ways to put this money away, either tax deferred or tax free,
Yeah.
and you'll find that I mean, man, compound interest, will the power of that is unreal. But with
Yeah. Absolutely.
I think state jobs, I mean, if they offer a 457 or 403B, yes, you can have both of them. And there's two separate, their contribution numbers are separate. So it's not like, having IRAs.
Hmm.
So you can really maximize there. But I think that I wish that they, state and local government agencies would provide a little bit more for state employees because they do, the job that that they work.
Yep.
I don't think that a lot of times have been. I mean, as well as I do, as far as, I mean, just look at us as teachers.
Hmm.
Health insurance for teachers is crazy. We got one of the largest teaching bases probably
Yeah.
in the United States.
Yep.
And why is that, teachers being charged $300, $400, $500 a paycheck?
A check. That's right.
You know what I
Yep.
mean? So I think
Hmm.
that there's, I do like that they offer pensions. They have things that are available to people, but I think that there's, man, you could do more.
Yeah.
Find a way to do more. Find whoever's managing it, man. There's no reason why you can't either negotiate a better rate or,
Right.
find a way to do better for people. You know what I mean? So,
Absolutely. Absolutely. Good deal, man. Uh, I hope people got a lot of value in that, man. That's some good information, brother. Appreciate it.
I mean, your dad, was he with the city of Houston? Who's he with?
He was with no, the city of no, the state. He was in
Oh, you're saying
Marshall.
it was the state. I
Yeah,
got
he
you.
was Texas Highway Department.
Ah, okay.
Yeah, yeah. So he had a pension as well. He didn't invest in it probably would have been a 457, but he did have a pension. So he was always pension oriented. I want to be an entrepreneur, but it's not safe enough, son. You need to
Man, I'm
get a
telling you.
government job. You know what I mean?
Hey, listen to me. I'm telling Coach, I promise you, you sound like me. My dad, look, my mom, City of Hollywood retired. My dad retired Miami-Dade County. Crazy. My
Yeah.
wife worked with my mom at City of Hollywood. When we moved out here, she worked for the city of Houston. She ended up
Wow.
going to private sector for a little bit, and now my wife is working for Harris County. I
Wow.
tell you, here's the thing about them government jobs, though, man.
Yeah.
Hey, like, you're
Yeah.
gonna collect that check.
Hmm.
You know what I mean? Now, I wish that, like, my mom, City of Hollywood took care of her. You retire City of Hollywood, and they gave her full medical and her pension.
See,
Don't
that's
worry
the
about that. And that
thing.
is an expense, you know what I
Yeah.
mean, that people don't always plan for.
Yeah.
No longer work.
Exactly.
Yeah. So, you know what I mean? Sometimes, yes, there are some cities out there that do a good job. And there's some, I think, that, like, come on, man, help a teacher out, man. Help us
Exactly,
out.
bro. Hey, at least come down on the insurance, man.
Man, if
You know
nothing
what
else,
I'm
negotiate a
saying?
better rate. I mean, gosh
Something.
almighty, that's,
Yeah, man.
but,
Insurance.
and it goes, that years of service stuff. I mean, yeah, we're teachers. So you know that. So it's
Hmm.
like, oh, you rule of 80, rule of 85, rule of 90. It's like, yo, I got to be 90 years old between my years of service and my age
Uh-huh.
combined before I'm allowed to retire. And then, like me, I'm rule of 80. So I was like one of the last years in.
Yep. I was right
And
after that. Yeah.
yeah, are you 85 or 80?
90.
You're 90? So
Hmm.
I mean, even worse.
Yeah.
So rule of 80. When I finally reach my rule of 80, I'm going to retire like 66% of my top 5 years. That's for like 20 something years of teaching.
Yeah. That's
That's
not gonna be a
crazy.
lot. Yeah, man.
I'm at 16 years right now.
Okay.
You're telling me, and I got another 12. So you're talking about almost 30 years
Yeah. I
of
just
teaching.
missed it. I'm at 14 years.
And
I
I'm
just
going to
missed
make 67% of my top 5 years. That's absurd, man.
if you don't make if your top 5 years don't average $125,000, it's gonna
Yeah.
be tough.
I'm telling you, and even still, you're used to living off of that money. So even still, if
Exactly.
it's, you know what I mean? It's
Hmm.
67%. So you got people that will work, and you see why some of these people are like, yo, I got 5 more years.
Yeah.
5 years coming in, like I got 5 more years. They're trying to get, as much of their, as the benefits as they can.
Exactly, man.
Because you ain't getting medical and you're already living off a teacher salary. Now you're living off even less than what a teacher is normally making. So
Exactly.
teachers, 403Bs, traditional IRAs, find something to put your money into.
Yeah.
You know what I mean? Set yourself up, because I'm telling you, TRS, you better find out if it's enough.
Exactly, man. Okay, Eddie. Let's talk about Social Security real quick.
Mhm.
First off, do you think we'll get it when we retire?
Yeah, I don't think Social Security is going away anytime soon, man. I think there's far too much money put into it. You know what I mean? That
Yeah.
I find it hard to believe it's going to be gone. I know it's the old adage everybody says, man. Hey, I hope Social Security's still around. When I retire, I think it will be. I mean, you talk to somebody that might tell you something different, but I mean, I think it'll still be around. Now, is
Okay.
it enough? It ain't gonna be enough.
So
Hmm.
if you have a pension, an IRA,
Mhm.
Social Security, stocks, uh, are you doing something right?
Yes, for sure. Like I said, you're thinking. I mean, look, you're looking forward to paying your future self, right? Living that dream life, the life you've always envisioned when you no longer have to work every day.
Yeah, Yeah.
So yeah,
Yeah.
you're on the right path for sure. For sure.
Okay.
Now, if you're in the market and you're just gambling, you know what I mean? In the market, well, then that's probably not. I mean, it's good to say you got stocks, but if those stocks you bought at 10 and they're worth 50 cents now, you're
Uh-huh.
probably not doing. But just the mere fact that you have the mindset to be able to want to put the money away, yeah, you're on the right track, I would say. But
Oh
I think,
yeah.
yes, with a pension or with some kind of retirement you've put away, IRAs, retirement accounts you have,
Mm-hmm.
on top of that, you add in your Social Security, which you and I probably won't get Social Security because of that damn windfall protection, whatever
So what
provision.
is that?
So basically, because we're retiring and because technically, well, not technically, we are not contributing to Social Security. We contribute to TRS.
So
Mm-hmm.
I have not been a teacher for 30 years. So my first 15 years, I worked in the private sector
Right.
and I paid Social Security. So now the last 15 years I've been teaching and not paying into Social Security. Uh, so will they penalize me or will they just give me what I put in?
So they're not going to penalize you. No, what they're going the windfall provision, whatever it is, it's here in Texas. You will collect probably 50% of what you're doing. So let's just say you had your 20 years. You had all, and they don't even do it by years anymore. They do it by quarters. You have to have so many quarters.
Yep, 10 consecutive quarters.
Yeah.
Well, it used to be at
And
least.
I think now it's something like you got to have 36 or 40 quarters or something. I think it's 40 quarters what you need to have contributing to Social Security.
Oh, okay, yeah,
Well, if you
10
had that and you
years.
weren't a teacher, you weren't contributing to TRS, well, then you would collect, kind of what you put in, based on, it's income. There's a formula that they use for it. Look based on, yes, how much you contributed over, the lifetime. That's why as you're getting older and you're in your prime earning years, it's like, man, they're taking all this money for Social Security. Well, that's so that
Mhm.
you can, hopefully, ideally get it back. But yeah, we're as teachers in Texas because we contribute to TRS. Now you may
Yeah.
have your quarters, but you're not going to collect it all upfront. You're not going to collect it all. So if you're due $1,000 a month from Social Security, you're probably
Mhm.
going to get about 500 from Social Security.
Really?
Yep.
Okay. And that's still about what my mom got. But yeah, Social Security, man. Okay. No, that's just another avenue that people pay into and will have available to them for retirement.
Yeah.
Yeah, absolutely.
And if
Uh,
it's not around, I want my money back.
that's
I
the
could look,
other.
I contribute whatever I put into it. I want my money back because
That's
they look, they're trying to go get people's money back from Sam Bankman-Fried. So
yeah.
you better go get my money back. You're the government. I want I want my money back if Social Security goes bankrupt.
Absolutely, absolutely. They got to give it to us, but no, I mean they really don't. But
No, and
I
they probably won't if they
yeah,
God forbid that ever happened. I mean, nice try, but it's probably not going to happen. But I think it's going to be around. All kidding aside, I do think that Social Security is still going to be around, and
uh-huh.
we'll at least see it now with our kids. I don't know.
Okay. Next thing, uh, and this is what I've seen a lot in education. I don't even think I've hardly seen it in the private sector, but uh, so do you know much about retiring, then coming back to work and retiring a second time? Like,
So
how
as
does
far
that
as
work?
teachers concerned,
Yeah, because
yeah.
I've seen a lot
So
of teachers do it.
I've seen a lot of coaches that do it. So these guys will have their years. They'll be head coaches, campus coordinators somewhere. You know what I mean? They're making them six figures.
Hmm.
They'll retire, and I believe last I checked, it was if you had to stay out of education at least 1 year, and then you
Hmm.
can become what's called a retire rehire. Now I
Okay.
do remember somebody mentioned that. Oh, I think they upped it to 2 years now, but I don't know if that's correct or not. But I know it's a retire rehire. So you collect your pension and you collect your salary.
And do you know if there are any adjustments to your pension or your salary?
No, I don't think there's any adjustment. I don't think that you contribute back into TRS though,
Okay.
because you're already collecting. But I mean, you're going to collect your salary that
Your
you're going to be
your
making. I
your
mean,
full pension and your full salary.
yeah, whatever your pension is when you're retired. You know what I
Yeah.
mean? So if you're
Yeah.
getting 78%, then yeah, you'll collect 78%. And then you go and you collect, your paycheck like you normally would if you had a job.
Yeah. Okay. So that's nice to know because some people, I'm sure, may not know how that works, but that's good to know that they won't be penalized for being rehired as a retiree rehire,
No,
you
I
know.
don't know. Hey, man, you know what? I did my time and I decided to come back and got a dish that wanted to hire me. You know what I mean?
And
Going
then,
back to some of the Social Security stuff too, man, the nice thing about Social Security is because it's there to help supplement, once you're no longer working,
yeah,
it allows you to, if you can afford it, to maybe not have to work full time.
Yeah, we're part
And I
time.
can know,
Yeah.
and I can work part time, right?
Mm-hmm.
You know what I mean?
Mm-hmm.
And
Yep.
then from that part time job and collect my Social Security, I can still
Yeah.
make ends meet, and I can still
Right.
live, kind of how I wanted to. But
Absolutely.
there's definitely a lot of pros to it,
Yeah.
but it's definitely not a lot. You know what I mean?
Yeah.
That people collect. So
Absolutely. Absolutely. Okay. Cool, man. Cool. So let's get into some stocks, man.
let's do
Uh
it.
yeah. So talk to me about you said you have something that can tell if it's a value stock or not.
Yeah, so I mean, when you're talking about a value stock, man,
Hmm.
just to kind of explain to everybody what I guess technically a value stock is. So you talk
Yeah.
about something being you're looking for a value stock, you're looking at companies that are considered to be undervalued, right? So they're
Absolutely.
trading their prices trading below their what their assumed value is. So
Yeah.
if they have a track record of being profitable, right, or they have a potential for long term growth, things of that sort, then and they feel as though they're underpriced. And there's ways to look at it, right? So you look at what's called the PE ratio, right, price to earnings, and there's formulas and all that stuff that you can go. But realistically, if you look for the PE, all right, the price to
Hmm.
earnings ratio,
Yep.
and you can also look at market cap. So looking at the PE ratio, I don't care if you ever learn what PE is, right? I don't care if you know the definition or anything. But if you look at it, they say usually if it's something, you know what I mean, kind of in the 20s, a little lower than 20s, that it
Yep.
could be considered a value stock, but you also got to look at, that it could be, have a PE ratio of 20
Hmm.
and 15, and you're thinking like, oh man, this value stock. You still need to look at the fundamentals and see, hey,
Yeah.
do they have room to grow? Is it something,
Right.
that's been around for a while? You know what I mean?
Yeah.
Why is it so low? So
Okay.
value stocks, yeah, man. Value stocks are good. So yeah, I do. I have a Python program uh, that basically just type in the ticker symbol and it'll tell you based on a Piotrowski score, all right, F score, and that's
Okay.
all that stuff. It will just tell you, you know what I mean, based on a scale of 1 to 10. If it's 7 plus, it could be considered a value stock. But again, you still need to do your due diligence and go research the company and
All right. Let's try some stock, man. You want to do that, man?
yeah, let's do that. Let's for
Yes,
sure. Let's
sir.
look at some
Let's
charts. Yeah,
uh so uh I'm looking at right now, I'm looking at Verizon.
BCW.
Yeah. Uh
It's crazy. The longer and longer you do this, man, how just people say company is boom. You just know
you
the
just
ticker.
know the ticker symbol just like that, yo.
Yeah,
Yeah.
yeah. VZ Verizon. Yeah, man. Verizon's been taking a beating.
Yeah.
You want me
Yeah,
to share
man.
the screen?
That's why I think it's yes, go ahead
Yeah.
if you want to, don't mind.
Let me put on VZ.
That's why I think it's good value, but we'll see if I'm right or not.
All right.
So
Oh man.
what's up?
So it's got a score of a 5. Let me go ahead and share the screen. As I show you. Oh man. Hey, you always disable my screen sharing, man. You want me sharing my screen, man?
My, you know what? I
And
forget I have to do that.
like week 5 doing this. I show up late to the Zoom meeting. We don't share the screen we're supposed to.
I know, right?
Yeah.
Oh man.
All right, let's see here. All right, so here's Chrome. Share this thing. So this is just the code. All right, it's not
Uh-huh.
go through all this stuff, but
Yeah.
the little things I will point out that you're gonna be looking for, man, is right looking at gross margins,
That
looking at how much
stuff puts
shares,
me to
current
sleep.
ratios.
That's the stuff that Bill Gates did when he first formed Microsoft, right? And start making the software. He just it was codes like that, huh?
Yeah, there's computer code, you know what I mean?
It's
And they do everything
crazy.
in all different kind of languages, man. There's Python, there's R, there's C++. I mean, there's all kinds of languages. This is Python, and I only got into it because, doing some DFS, man, some DraftKings stuff last year playing basketball. I met a dude online and showed me how to type some of the stuff up, and it's like, man, I can use it
Really?
for stocks. Yeah, yeah.
My
So, but
brain
anyway,
is
looking
not
at
right there.
the balance sheets and looking at the financial statements, it'll go through and it analyzes it. Right, you just put in the ticker symbol. Like I
Okay.
put it here, I put VZ
Okay.
and run it, and it'll give you a score. So it's showing that it's a score of 5. Now, again, you still got to do your due diligence, and we can look at the chart and see, like, all right, man, what's been going on with VZ, and why is this thing only got a 5? So
Okay, so first of all, tell me what are considered good scores? What's a range considered for
let's
good
say I
scores?
think the scores go from 1 to 10.
Okay.
And I think that 7 plus, give or take 6. I mean, if it's a company, you know what I mean, that you really like.
Oh,
Um,
so 7 and up is good value, or
yes,
six
it's supposed to
six
be.
and
It's,
up.
but it's considered based on the financial and everything that
Uh-huh.
it's a considered. You know what I mean, could be a value stock.
Okay.
So I'm sorry, not 1 through 10, 0 through 9. All right. So
Okay.
they'll assess the strength of the company's financial position. So they're going to look at the company's, again, financials, balance sheet,
Okay.
uh, income statements, cash flow statements, things like that. And then they will, it does everything it needs to do, does all the calculations for us. Again, let the machine do it because it's far smarter than we are. I just want to
Already.
type in the ticker and boom, machine, do all the calculations. I don't want to sit there, pen and pencil and accounting paper. I'm not doing that. I might make it a
Not,
damn T accounts.
yeah, not at all, right?
Yeah, you know what I mean? So here it is here, just so, just showing everybody on there. All right. So just
Yep.
used by financial investors, and it goes on a scale
Find
of
the
0 to
best
9.
value stocks. Okay.
Yeah. So
9 being the best.
yeah. So
Okay,
9
so
being the best.
so Verizon is a 5. All right.
Bottom of
All
5.
right.
So better, if I guess the closer you get to 9, the more it would
The
be considered
better.
a stock. But it's
Yeah.
been beaten up, man.
Yeah.
I don't know what's going on news wise. Let's see if there's anything on here. Going back to, let's see when it dropped. Back to July. Let's see if they got anything on here, man. So anybody wants to know, man, this is Trading View. What I'm showing the charts on everything. You can
Mhm.
access this. It's a free account. With a free account, it's only allow you so many indicators and stuff and so much functionality. But if you're ever looking to kind of piddle and learn about charts and things like that sort, you can go to Trading View. They ain't sponsored
Trading
something
view.
like that, but you know what? We need to probably get them on and say, hey, don't mind sharing the stuff, putting stuff out there. I love it. It's what I'm comfortable with. There are plenty of other options out there, but sometimes
There's an app. There's an app for your phone, and
yeah, Trading View, yeah, there's definitely an app. So going back to July, there's communication services tech. So there it is. Social media stocks,
hmm,
Snap and Twitter swung second quarter. Okay, news. Trying to see why. There it is. Verizon Communications slash. Oh, there it is. So that's why slash its full year earnings outlook as customers pulled back on spending. Again, going back to July, right? We're starting to
yep,
battle this inflation stuff.
yep,
So now that does not mean that it can't bounce back. I mean,
absolutely.
you look from here. I mean, when it gapped down, boom, and it gapped down again, and it tried to fill it,
So
almost got to it, and didn't,
yeah,
and just didn't have the strength.
absolutely. So I know this next one is going to be a value stock because because Bill Gates had a heck of a lot of these in his portfolio.
What's that? Let's hear it.
RSG.
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 All right. Survey says I got a score of a 6. Check out the
Oh,
chart.
oh, just a 6. Okay. All right.
Boy, it took off today, didn't it?
Yeah,
Mighty up
absolutely.
$2.64 today.
Yeah.
Uh, let me get all this extra stuff out of here. So you guys just see the screen here. I mean, like it's rallying, man. It's on an uptrend.
Yeah. Yeah.
Look at
RSG.
that's an uptrend if I've ever seen one.
To now let's look at its rival, its counterpart.
Ooh, don't say waste management because I'm a waste management owner.
Hey man, so you probably already know.
I mean, I hadn't compared the two, but I
Okay.
will say this about RSG before we get off of this thing, man.
Yep.
That if you look, I mean, yes, it broke these highs here,
Uh-huh.
and before it came back down, but you look again, it tried to rally here and kind of got stalled out. And look, the rally day, it cleared this previous high, so we can clear
Yeah.
this. It's got a
Yeah.
chance to probably take a little run there. So
Okay.
look at waste management. There it is. Look, there it is right there. Look in the portfolio right there. Waste
Sure
management.
is. Yeah, buddy.
Ooh, look at that thing go. But you know what?
hmm
Hold on. Before I even look at the chart, let's type it. Let's see what it comes up as because it could just be that it ain't worth a jump. Score of a 7.
Oh, we moving on up.
There we go. Slowly but surely.
Yeah.
So yeah,
Yeah.
I mean, I've liked waste management.
Yeah.
Until they start dumping garbage in space, you're gonna need somebody to come pick it up.
Already.
You know what I'm
Already.
saying?
Yup.
So,
Yup.
I mean, again, same thing on an uptrend. I mean, it's almost trading similar to
To RSG.
let me pull this other one up. Let me see if I can do this, man. Bam, look at there.
Yup.
RSG. I mean, almost identical in the patterns.
Absolutely.
Look at that.
Sure
Down,
is.
up, down, right? Same
Uh-huh.
thing. Up, down.
That
Same thing on
humpback.
top here. Look at that.
Yeah.
Whoop,
Do,
whoop, whoop, almost identical.
do y'all in the finance sector, do y'all call that a humpback? Do y'all call that a camelback?
Man, I'll tell you what I call this. Exactly what it is. These jokers are trading. I mean, they're highly correlated. Man, they are trading in unison. So I would not own both of these, obviously,
Right.
because when one's going up, the other one's going up. So if they're both down, they're both down. You know what I mean?
Uh-huh. Uh-huh. Uh-huh.
So, but I mean, almost identical. Look at that.
Yeah.
Same trend, almost the same damn trend line. Look at this.
And just so everybody know, I've been following them during the pandemic, and those are two that they haven't gone too far down. In the pandemic, man, they've been going up. I feel comfortable saying waste management is a pandemic buster, and I think RSG is right there.
So look, we'll go back. Man, it's crazy to think that this stuff, man, you know what some of us will talk about, man?
What's up?
And I'll tell you, dude, what's up with the China lockdowns, man?
I saw that, man.
Oh, what, we're 3 years into this COVID stuff, man. You mean to
Yeah.
tell me that y'all are still battling that stuff over there? Did you hear about the apartment fire that happened?
Mm-mm.
So the
Mm-mm.
government, because these people are going to tell you cannot leave your house, like do not walk out. They're locking people from the outside in, is what the story said.
Because of COVID?
Yes, 40 people in the house. An apartment building caught on fire, and people perished because they were locked in to their houses, doors locked from the outside.
Wow, they lock them
Yeah,
in from the
man.
outside?
Yeah, you hadn't seen the protesters going on over there, man? Yeah, they're
Uh-uh.
protesting. Yeah.
I've been
But
too.
look, yeah, I mean, it took a little dip, February of 2020.
Uh-huh.
I mean, down here in the March, but look at that rally it's made since
Yeah,
March.
man. Yeah. That thing, yeah. And that would have been the best
Look.
value to get it right there, boy.
Oh my gosh. Here,
You'd have
look at this right
killed.
here. Even if you bought it, you didn't even get it all the way at the bottom.
Yeah.
And to where it's at now, ooh, it's 103%.
Wow. Doubled. You doubled your money.
Can't beat that with a bet.
Check
And
out
top, man. Oof.
so I'm getting closer and closer to high value stocks,
Let's
baby.
go. Let's
I
go. But
I
again,
think
sixes and sevens probably bad. Like I said, with something like this being a six, yeah,
mhm,
I mean, I'd be so undervalued. But I mean, you can tell just, I mean, looking at the chart, I
yeah,
mean, it's there's a
yeah.
good upward movement there. You know what I mean? It's got momentum.
Uh-huh. Yep.
It looks like. I mean, the
Yep.
MACD is above zero. It's about to be in overbought territory here in a little bit, but
Which we're gonna
everything
make
else is looking good.
yeah. Let's look at Disney, man.
Oh yeah, I like Disney. I
Yeah.
like Disney. I like
See
Disney.
what it say. See
I
what
want to see.
Petrovsky says about
Yeah,
them.
let's see what Mr. Python program here says. DIS Disney. Ooh, smacked it with an 8.
Oh, that is crazy,
Now
man.
it makes sense now because Disney's not going anywhere, and their streaming business has been doing fairly well. I mean, there was a little point there where they were worried about subscribers, but again, a lot of that stuff comes from password sharing.
Yeah.
That's what Netflix and these guys are starting to combat. That's why they're bringing ads. If you hadn't heard, Netflix is bringing ads.
Yep.
Yeah, you know what I mean? Ad revenue. So,
Uh-huh. Hey, that's
but
that's
I mean, I remember when it was at its peak up here.
me too, man.
And look
Me
at
too.
this. And then that long ago. I mean, this was last year, March.
Yeah. What number is that? Is that its peak?
202, give or take, 200, a little over $200.
Okay.
And then it
Yeah.
traded sideways, consolidated a little bit, and waiting to see
Yeah.
what went on. And then here it is. Look, they missed earnings, and that's all it took.
Yep. It's
All right,
back
that's
down
all it
to
took, and boom,
98.
got down. It still hasn't rallied back.
So if the high
So
is 202 and it's at 98 right now, I like that value. I like that value. It might
yeah,
take it a
especially when
year
you're
or
talking
two
about
it might take it a year or two to get back, but I like it.
and it found. I mean, look at the strong support right down here, man. Where I found it, right in
Wow.
here. You know
Yep.
what I mean? So
Uh-huh.
not terrible. I mean, and look, this is when I mean, last time it was this low. That's when it hit that 202 mark, man. So you're looking look 131% there. Now, don't let it just not get it, Oh, there,
Does
hold
that
on.
show you how long it took to go from
Yeah,
there
yeah,
to
yeah.
there?
I'll show it to you right now. So, I mean, to get where it kind of bottomed out down here was 611 days. All right, that's trading days.
Okay, so
All
about
right, so
two
that's
years.
March of last year at its peak down to where we're at now.
Oh, you said
And it's
six.
down 56.5, 50, almost 57%.
Oh, you said 611 days. That's
Yeah,
2 years.
trading days.
That's almost 2 years, ain't it?
What, almost 2 years?
Yeah.
Yeah. Yeah,
Okay.
remember, this is March of 2021. We're in November. We're almost at the end of
So it
2020.
almost okay. Yeah, yeah. My bad. Yeah, yeah,
Yeah.
yeah. So it's
Actually, I
yeah.
mean, till today, it's actually 630 days.
Okay. No, I got you. Yeah, that makes sense.
Now, that's 630 total days. I'm sorry, not trading days. It's 436 trading days, 630 total days.
Oh,
My
okay.
bad. I'm misinforming everybody. So I don't
Okay.
know if everybody can see it on the screen, but it says 436 bars. Each one of these
Yeah.
candlesticks is 1 day. I'm on the
Oh,
daily.
okay. Look
Yeah, and
at
then
you.
630 total days from them.
Oh, okay. That makes sense.
But I'm a believer in Disney. Disney's not going anywhere. I promise
Yeah.
you that. They're not. They're going to be around for a long, long time.
Yeah, buddy.
They've been around for a long time. So I do like it.
Eh,
You know what I mean? Again,
Yeah.
missing out on earnings and stuff. I mean, that's going to happen. Again, things more expensive, less people traveling,
Yeah.
plane tickets, things like that. But I think again, it's cyclical.
Yeah.
Disney's. I have a hard time believing that Disney's going to tank and drop down into the tens. And if it does drop into the
But
tens, I'm buying a bunch of it.
it's already I mean down over 50%. So what's tanking? Because it went from 202 to 98. So it's less than it wouldn't that be considered tanking already? Or what's
Yeah, I
tanking?
mean, I
You know?
would think so. I mean, when I'm talking tanking, I'm talking like, oh man, you bought this thing at, you got in at 150, and this thing is now worth $30 a piece.
Okay.
You know what I
Okay.
mean?
So yeah. So yeah.
So I mean, even still, I mean, it's all relative, right? So I
Right.
mean,
Yeah, definitely.
when you think about it, I mean, going from $200 down to $100, okay. But I'm talking about
Yeah.
going, 150 down to $10, all right? I mean, 140,
Exactly.
$150, but something that really just like, oh man, that was really, really bad.
Right.
So,
Check out UPS.
man, I like Disney. UPS.
I like Disney too.
I used to work for UPS, man, before they
Oh, you
went.
did?
Yeah,
Before they went what?
before they started. So prior to being able to buy it, it was privately held, so they only offered stock to employees.
Oh, really?
Mm-hmm.
Oh, okay.
Yep. So here's UPS. Um, you know what? I'm gonna put FedEx up there as a just as a
Yeah.
comparison so we can see
Yeah, that was my next my
FDX.
next one.
But
Hmm.
so let me get these things kind of where you can see everything. I mean, they almost gapped at the same time, right? They had a huge guy. I remember when FedEx missed on earnings, and it's crazy because the quarter prior or two
Hmm.
quarters prior, the CEO was on there talking about how great they were doing and shipments were up and blah blah blah, and then they miss out on earnings big time, and you see the drop off, and you see, I mean, look, UPS hadn't missed on earnings yet.
Wow.
But again, you got to take that kind of with not necessarily a grain of salt, but understand that sometimes there'll be earnings and the stock price still drops. Like,
For
what's going
sure.
on?
Right, right.
And it could be their earnings guidance. They just say, hey man, we're probably gonna have to slash earnings. We don't think we're gonna be making as much as we thought as we originally, anticipated. Stuff like that happens.
Yeah.
But then you look at, uh, their financial. That's the nice thing about TradingView also. You can click on the earnings and see all the financials. All right, look at all their financial statements, income
Mm.
statement, balance sheet, cash flow. So this is where you would go in and start looking at some of your uh, getting down to the meat and potatoes of everything of seeing if
Yeah.
something's really a value company or not.
Yeah. So look at
They're trading at almost the same price too. They're about $7 away from each other. That's crazy.
you gonna see what their score is?
Oh yeah,
Yeah,
think
yeah.
about
Let's
that,
see
man.
what
Let's
their
look this up.
score is.
Let's see what UPS looking like.
Yeah.
UPS. UPS got an 8.
Okay. Okay. So
FedEx.
Disney, UPS,
I look
okay.
at I look at Disney also. Here's FedEx.
And FedEx is
FedEx got a score of a 5.
okay.
Again, that's because when they missed out on earnings not too long ago, it took
Uh-huh.
a big hit, man, because they missed pretty big on it.
Yeah. Yeah.
And it's always because what the street was expecting, right? What Wall Street was expecting them to be earning, and what they reported.
For sure. For sure.
Disney with a fat 8.
Good.
Disney with an 8. UPS with an 8. Again, for anybody, all our listeners, viewers, guys, still make sure you do your due diligence. I am not telling you to go out and buy into these stocks. Erik's not telling you guys to go out and buy this stuff, and then you go out and you buy it, and something happens, and price tanks. All right, so make sure you're still going through and looking at due diligence stuff, man, and seeing what's going on with
Yeah.
the company itself, any news,
Absolutely.
what's going on, maybe in the industry, keep up with the sectors.
Absolutely.
So,
And I'll say everybody has different points that they look at that matter to them. So you
mhm.
find out what points in each stock or company that matters to you. And, a lot of times that can give people uh the confidence, the courage that they're making the right decision based on what matters to you, you
For
know?
sure.
Yeah.
For sure. And you look at these head and shoulders patterns, they almost match up too, man.
Yeah.
Look at this. There's a head, there's a shoulder, boom, price drops. Looks
Ah,
like a dang cup and handle forming here, though. I'll tell you this.
hey,
And if it
I
does
feel you,
form,
man.
look at this. If this thing, let me see something here, man. There's your cup, kind of. See the little bowl there? If
Yeah,
we,
man. I see it look like a shot glass.
yeah. So look at this right here. All right, kind of like there's your cup part. Well, we'll
Uh-huh.
wait to see. This is not 100% guaranteed and by any means, but here would be your handle. So you would anticipate price possibly coming down a little bit if it's a true
Already.
cup and handle.
Yeah.
Price starts to retrace and kind of bounce around here, and then usually on a cup and handle pattern that forms,
Hmm.
price will break above this white line here and then
Okay.
run up.
Okay.
So could
Good
be. I
deal,
don't know that
man.
it's what I mean that it's for sure a cup and handle, but it looks
Yeah.
like it could be something forming there.
Cool.
But it does have some momentum. I will say that. I mean, it's almost an overbought territory.
Uh-huh.
But I mean, if you look at this, these are all moving averages, right?
Yeah.
So you got everything from a 9-day moving average all the way to like a 50, 200-day moving average. Well, when they're starting to close, right? You're looking to try to get above the 200-day moving average.
Yeah.
That's what you're looking for price to really start. All right, we're back up above 200 days.
Already.
Let's see what we
Shoot.
got here. I believe this is the 200. Yeah, the 200 is the yellow. So let me turn the rest of these off and I'll show you. Kind of, this is the 50. All right, that's what we'll look at. We'll look at the yellow and we'll look at the blue. All right. 50-day moving average versus 200-day moving average. All right. So we've crossed the 50-day moving average. Came back,
Hmm.
retested it, bounced off it almost perfectly. So what you're looking for now, and this is another strategy people use to trade, is you take this blue line here,
Hmm.
and when it crosses from underneath this yellow line, so when you get that cross, a lot of times could mean that price is going to go up. With me.
Okay.
So same thing here. Blue cross down from the top down, and what happened? Price goes down. You know what I'm saying?
So you wait, but
These
what
are
about,
longer moving averages, so it's going to be lagging. You know what I mean? So they're going to get
yeah,
it. So
but it
by the time
crossed,
this formed here, this crossed,
yeah,
you know,
it crossed
would have
up,
lost.
it
Yeah.
crossed up right there and it didn't really
It
run up
just it
though.
didn't have enough steam. Again,
Didn't have
yeah,
enough
it's not going to work
steam.
every time. So you can
Yeah.
go through and I'll show you a little circle. So it crossed right there.
Okay.
It crossed there to the downside. You know what I mean?
Yep.
Let me go back and see where it crossed to the other side. Look, there's a rally for you. Look at that. Ah, here we go. Look at this. Right there. You see that where it crossed that there?
Hmm.
Look at that. And then look at this rally. It
Oh
went on.
wow. Yeah, yeah, for sure.
I mean, gapped up. Boom.
Hmm.
Never closed, filled that gap.
Yep. Yep.
Gap down a little bit, filled it. You know,
Yeah.
look, gapped up again and eventually filled it and then gapped down. But man, UPS. So if you'd have gotten in here and you just said, yo, I'm just going to trade based off of the moving averages,
Right.
and I'd have gotten in right here.
For
So
sure.
this is where it closed that day. And we'll say we got 1 day later, got full
Already.
confirmation, and we're going to take that trade from there. And we went until it crossed.
Yeah.
All right. There. There. So hell,
Hmm.
I mean, that's still 56% from
For real.
July 20 to April 2022.
Wow. Yeah, it is, man. Yeah, it is.
I mean, it went from 115 a share to 180 a share.
That's what's up. That's what you should have got in at that point. Man,
Yeah. I
appreciate
mean,
it, bro.
these are lagging indicators, man. So it's going to
Yep.
happen. You know what I mean?
Yep.
You're going
Yep.
to catch the signal late. And I mean, I got some other stuff that software that I paid for
Yeah.
that does a good job of
Okay.
letting you know. And I've kind of went through and back tested. Those jokers are pretty accurate in predicting the high and the low of the day.
Oh, okay.
Within the penny
Okay.
sometimes, like
Wow.
really close. Yeah.
Yeah.
So
That's what's up, man. Appreciate that, bro. Uh, this was good, man.
yeah,
Uh,
another week down, man. This was
yeah,
good.
man. I hope our audience got something out of that retirement talk and the different funds you talked about, man. Because I thought that was pretty good stuff.
Yeah, I tell you, and here's the deal with some of this stuff too, man, is understand the difference between being a passive investor and an active investor. You know what I mean? Being
Yep.
passive, you know what I mean? We're trying to limit the amount of buys and sells, right? Being long term as opposed to an active investor is kind of constantly buying, selling, buying, selling, buying, selling. And when you talk about modern portfolio theory, you're trying to, diversify. We talked about last week and making
Hmm.
sure that, with the diversification that you're in there, you know what I mean, for the long haul. Like I'm doing this because I know I'm trying to gradually build and build and build and let this thing grow exponentially. So making sure again, diversification, guys, understand that you need to diversify. There's nothing wrong with having several different accounts. All right. So
Absolutely. Absolutely, man. Uh, okay, that about wraps it up, man. I wanted to thank our sponsor, Christina
yeah,
S. Moore,
yeah,
Keller Williams Realty, Clear Lake. Appreciate you. Uh, and next week is another week, man.
yeah,
So,
sure.
my niece, man, my niece will be in the NCAA volleyball championships, man. She's
Really? Where's she
Yeah,
playing at?
she's playing at the University of Kentucky.
Is she really?
Uh-huh.
When are they playing?
They play tomorrow. I want to say 6:30. It
Tomorrow,
should be
6:30.
on
What's her name?
ESPN2. Her name's Ajani, Azhani, Ajani Teeler.
A-N.
Yeah,
Taylor.
Azhani. Mm-hmm.
Yes, sir. Yeah,
Yep.
no, I'll put it on, man. Heck yeah, go support that girl.
Yeah,
I
man.
got something blue too, man. You know what I mean? Kentucky.
Already.
Yeah, man. Hey, one last
Appreciate
thing
you, bro.
coming up. Hey, we cap be on the lookout, man, because we got another sports giveaway coming up. I posted
Okay.
in the group, man. So anybody that all the viewers out there, find me on Facebook group EightOne Capital
Yep.
and do another giveaway. I'm big, we're coaches at heart. You know what I mean? So big time sports
Absolutely.
memorabilia person people, and
Absolutely.
we got another giveaway coming up. Actually, I'm doing two giveaways, man. I'm doing one sports memorabilia. And the other one, I got a friend of mine working on. He started up a business that does like custom blankets, kind of like the big snuggies.
Yeah.
Got a hood, huge blanket, whatever, man. And we're gonna be giving away one of those holiday season.
Cool.
Nice little gift for somebody, man. Big flood, and especially it gets cold out here. Again, I got
Yeah,
that warm
man.
blood still, man. I'm cold in my house now. You see where I got my hands in my armpits, man. I'm cold as it is now. So
Yeah.
yeah, be on the lookout for that, man. So join the Facebook group if you hadn't, man.
Uh-huh. All
Post
you
some stuff
gotta do
there.
is what? Answer a question.
Yeah, that's it. That's it. Answer a question. It's not
Yeah.
sponsored by Facebook or anything. It's just
Yeah.
I'm gonna put a question up there. You post a comment. Once I shut all the comments down, that is it. I'll put everybody's name on the
Yeah.
big, Wheel of Fortune deal
Yeah.
and
Yeah.
spins and whatever.
Yeah.
And I do it 5 times. And I try to do it live this year so that people are like, oh man, how come
Yeah.
this person won? That's just one of his friends. Everybody that's
Yeah.
in that group is probably a friend of mine. But I do it 5 times, and on the fifth time I do it, whatever
For
name it
sure.
is,
For sure.
friend of mine, Lance Creason, who actually coached with me at Lamar Consolidated, he won the Case Keenum helmet. And
Okay.
yeah,
Congratulations, Lance.
yeah.
Hey,
So
man. Appreciate it, bro. Uh, Rockets just lost. What else is new?
they've seen you say that, man, but I went to the dang Hawks game the other on Friday, and I go and look, I'm a Rockets fan. I live in Houston, man, but
And
when
they
you go over
won.
there
Yeah.
and they beat the Hawks, and boy, I mean, I'm cheering for both
Absolutely.
teams. Just going back and forth. Trey Young getting buckets, Jabari Smith Jr. over there knocking down threes, man. It was a good
Yeah.
game, man.
That was a good
They're
game,
going to be
man.
okay. Those Rockets. They need somebody that's going to let them boys just run and gun. Those
They
boys are athletic, above the rim type players. Let them run.
they need to play defense too. We don't have no
Yeah, no, yeah, I'm
defenders.
with you. I'm with you. But
Yeah.
that's youth. They need a veteran piece to come in there and show like, yo,
Exactly. They
this
need
is the
some
way.
veteran defenders, man.
Man,
Let
you
them let
find
them let them young boys run and gun and let them veterans play D. Lock you up on
yeah,
defense,
man.
man.
I mean,
You
you
know what I'm
imagine having
saying?
somebody like Chris Paul in there now, a veteran, somebody
Man.
can show these boys this is the way, boys. I'll show you.
Yep.
What D Wade did when LeBron came to Miami.
Yeah,
D
exactly.
Wade say, baby, this is your team. You got it. I'm here,
Yeah.
support role. This is
Yeah.
how I get it done. Let's go. I think they get
Absolutely.
that. They'll be all right.
Yeah. I just hope Solace is around to see it, man.
Hey, you know what? And if he's not, get somebody in that's going to let him go. Bring in Calipari from Kentucky or somebody, man. Bring in somebody. Let them boys run. Bring
Cal
Jason Kidd in.
Calipari, man.
No, not Calipari. Don't bring him in. Don't bring none of them jokers in. Anybody's been at Louisville, Kentucky, Kansas. Don't bring none of them jokers in.
Hey, because they
Man.
gonna try and as soon as things get rough, they gonna dart back to the college ranks, man.
Oh man, see,
They
that's what
ain't,
they
they ain't
do.
got
You know
no
what I mean?
loyalty, man.
Well, and a lot of that too is, man, they're dealing with contracts, you're dealing with adults and stuff now, man. And their
Yeah,
egos are,
yeah,
at least in college, you tell them, yo, buddy, you ain't playing. And if you're not
exactly.
playing, you can forget about, me trying to get drafted. So,
Yeah,
you know what I
exactly.
mean?
Yeah,
But,
man. All right, brother.
bro, I'm gonna be pulling for tomorrow, man.
Hey,
If you
appreciate
text
you.
me, remind me, man. And anybody, like I said, viewers, man, support them, man. Support is your niece, right?
Yep, my niece, my
Yeah, support niece,
brother's,
man. Go
my
watch it.
brother's
It's nothing
baby.
on you. Just take you 10 minutes to put on the game, watch, play a little bit.
Already.
We appreciate you guys being on the channel, man, and supporting us.
Yes, sir. She's number 15, brother.
15. I'll be on it. I'll be
Yes.
watching.
All right, man. I'll talk to you
All
later.
right, man. You
All
guys
right.
have a good one.
Yes, sir. Yeah.